Hey there, and welcome to my YouTube channel. I want to talk to you today about investing as a contrarian and also a bit about a virtual portfolio, the things that I use to just hone in my discipline and my strategy. It wasn't an easy path, but I learned a lot along the way, and I hope my experience can help you get started when you start to invest on your own. You see, I started my investment journey in 2017 and I knew nothing about stocks and shares. At first, I tried to copy other investors and see how they worked, but unfortunately, they didn't work for me. Eventually, I had to go back to the basics and start reading books because I couldn't afford courses. As I kept reading, my understanding started to grow a little bit more and I learned a lot. It developed just my baseline, it helped me with my temperament, and eventually I mapped my strategy to my lifestyle. You see, I became a contrarian. It's where I found my calling, and being a contrarian investor isn't really popular among some of the folks on YouTube because it isn't sexy. No one talks about it. There's no flashy cars, there's no swimming in money or boasting about your assets. A contrarian goes against the market grain and they seek to exploit a downward market and profit when it is bullish. Think of a contrarian as someone who actively seeks for quality products at a discounted price. And as demand goes up and it becomes popular, a contrarian then sells their assets at a much higher price than the amount that they purchased it for. In other words, they seek to profit from companies that are priced much lower than the intrinsic value. Most people are contrarian investors, but they just haven't applied these skills to the stock market. You see, to be a contrarian investor, you need to have a diverse skill set. You need to know a bit more about a company's accounts. You don't have to be an accountant, but just know a little bit about the company's accounts and some microeconomics of a business and its market conditions as well. You also need to focus on areas that you are good at. Warren Buffett normally calls this your circle of competency. That is basically a particular segment or sector within the market, and even strategy, the type of strategy that you're applying. You don't need to be technically sound or have technical skills to help you interpret the market. You see, technical analysis involves the changes in stock prices over time and examining historical trends while factoring in new information. You don't need that. It's also about not mapping just things on charts. There's a lot of luck and intuition and strategy involved, and to traders is their bread and butter. By the way, I do not have anything against traders. They generate a lot of liquidity in the market. You see, without traders, from both buy and sell, the spread will be huge and purchasing things will be very discomforting. Even seasoned investors and traders are students of the market as well. So we're all students trying to graduate, even if you have decades of experience. As the market changes, investors must adapt, same as traders, to situations and use their intuition and knowledge with the skill sets they've basically developed over the years to make right decisions. Unfortunately, there are other people out there, snake oil salesmen, who try to convince you of buying their courses and they'll teach you their strategy. And all you need to do is basically buy a book. They'll show you different lifestyles that really attracts you, boost your ego, but in reality, they're just trying to sell you something. They go about a long way to basically try and convince you. Be wary about those people and do your research before you jump into any courses as well. Remember that successful investors or traders rarely share their secret sauce or have time to even promote their courses. And if they do, it's usually with a select group of trusted people or individuals that they've bonded with over the years. Trading and investing are often used interchangeably, but there are some slight differences, so don't get those mixed up. You see, when it comes to trading, they have different skill sets and strategies that they apply. For example, with traders, they may focus on short-term goals and investors will focus more on the long-term growth of an asset. Traders also do not really care about the underlying value of an asset. Or when I say asset, I'm talking about stocks, as they hope to more likely exploit the discrepancies quickly of the market before it catches on in a short space of time. So they look at the prices and they just exploit that. See, they use it by disseminating information and baking it into the price of a stock, and to them it's like gold dust. This is why you often tend to hear, traders talk about the news constantly and watching the price movements every day and mapping things out to make sure that it matches with their strategy. In a way, both trading and investing are risk managing because they're aiming to gain more on the upside than the downside. So if you're interested in investing, start by building your knowledge and developing your own investment strategy. Learn from some of the best investors, read their books, and just really absorb it, sponge it all in. And remember that it's all about exploring ways to get better by looking at the fundamentals if you are talking about contrarian investing, and later on the micro and the macroeconomics of a business. Don't be afraid to take smart risks, because smart risk can really pay off. When I say smart risk, I'm not talking about foolish risk, but risk that you've really thought about strategically. And remember, investing actually takes time and persistence as well. Anyways, one of the things that I ended up using a lot more was a virtual portfolio. It helped me tremendously because it helped me assess my strategy, my discipline, and I wasn't using real money. I was using money that was fictitious because I was just typing in, you can put in £200, 200,000, whatever, 2 million. And you wouldn't really necessarily be trading, but you would be assessing how you would invest with real stocks that will tell you whether or not you've actually made money or you've made a loss. And it really helped me because it made me understand the type of temperament that I had when it comes to investing, my behavioral biases around investing, and it built my knowledge as well because I ended up understanding how certain things worked, and it calmed me down a lot more. Whenever there was a downside trend in the stock market, I didn't hesitate, and I just kept reading alongside applying these skills over time on the platform. I want to show you exactly how it looks like. I want to briefly touch on it though. I'm not going to tell you every single bits and bobs that's in there. You just need to do your own research. Go in there, learn from the basics, and get started. So today I'm going to show you how to use the London Stock Exchange virtual portfolio. It is very key to start using this, especially if you're a beginner and you want to get your feet wet. All you have to do is just go on London Stock Exchange. I've opened the tabs, but I'm just going to do it like as if, I'm starting fresh and I don't know what I'm doing. Because this is how I discovered it in the first place. You go on the London Stock Exchange, you click into it. Once you click into it, you go to personal investing, you go to virtual portfolio and watch list. So you click in there. Once you've clicked in there, you can then sign up by clicking on virtual portfolio. And, I'm already signed in, but the best way is to sign up if you're new. So let's start all over again. You go to personal investing, virtual portfolio watch list. You click on virtual portfolio, and once you click on virtual portfolio, you can go to new account and you just sign in with your credentials. But since I was already signed in, I'm just gonna click back into it. And as you can see, it's fresh, it's new. I haven't really set up any portfolio. What you can do is just select new. So this is the first thing you must do. Then you just enter any name that you want. Some people like to call theirs stocks and shares, ISA. You can call it, I don't know, any alias that you want. I'm just gonna put Mr. Motive as an example. Because you're literally creating a portfolio, that's what it is. And you're going to enter your initial capital. So in the real world, you will have real money to invest. But since we are using a virtual platform to simulate, real sort of stock trading or stock investing, we can make up one. So I'm just gonna put 20,000, and you can change the currency depending on which country that you are in or you're interested in. That's a preference. Once you've selected that, you can click into that virtual portfolio because it's already created for you. Then you can start playing about with investing. So this part is where you basically insert the type of asset that you want to choose. So for me, for example, I'll click on Apple, and Apple has a ticker number or an epic number as APPL, or you can actually enter Apple. And it's intuitive like that. It can actually help you find the particular equity that you're looking for. As you can see, you've been met with quite a few types of asset classes. So you have equity, bulk standard. Everyone knows equity. I don't need to explain it. Here you've got bonds, which is a fixed income security. So it's a corporate bond. Then you have ETFs, which is also a pooled investment vehicle, exchange traded funds. It behaves similarly to equities as stocks and shares, but it's a pooled investment vehicle, which means that it's a collection of other investments. Now, this is not necessarily apples, but I'm just explaining to you what these particular asset classes are, or asset types. You can click in here because this is what we are looking for. And as you can see, it's ordinary share. This is why it has ORD. Whenever you see ORD, it just means ordinary share. And it's for ordinary public people who want to invest, so public investors. And you'll be met with the volume. As you can see, it's very liquid from the number of trade volumes and also the trade values that it has. You can click here to see the details. So if you do not understand any information that is showing on here, you can click what's this, and it gives you a lot of information to read. And this was so key for me when I first started investing. I didn't know what to do, and I read about it. I went on Google, I asked what certain things meant, and I just went back and forth just to try and really solidify my understanding. And it was great because over time I ended up understanding exactly what they meant. Now, as a contrarian or as a value investor, I don't really care about the 1 year line, although I'm interested in the 5 year. But usually when it comes to chart, I just want to know whether or not the price has continually gone up over the years and not remained stagnant due to the lack of growth within the company. So you can see here that Apple has been literally growing steadily over time, which is great. Now, to invest, all you have to do is just click on track, add to portfolio, and you'll be met with a screen that asks you to enter the quantity. So here you can use a bit of a calculator on the side and just calculate how much it is by timesing it to the number of shares that you are about to purchase. So the price times the number of shares that you are about to purchase, which is the quantity, and it will give you a particular value. You can also add additional costs. So in future dates, when I take you through how much costs are related to buying assets, you can use this to simulate how much costs you might incur. But for now, I'm just gonna enter maybe 10 and click confirm. Oh, I forgot that one thing to explain that I didn't highlight is that you can actually add additional notes. So if we go back a bit, you can add additional notes to justify the reason why you're purchasing these shares. This is very, very key, especially if you're new to investing and you don't want your behavior, or you want to basically develop a particular type of discipline and strategy. It's good to enter why you're buying these stocks and what is the reason, so that over time, as you grow to understand how these markets work, it will help you develop your own strategy that is well accommodated to your investment style and the type of temperament that you have as well. You also have the liquidity. So once you've invested and you've purchased it, the liquidity will change. Liquidity is how much cash you really have to basically invest. As you can see that we've already invested previously. Even though I went back, it has counted it and it will show on there. You can also change the summary details by selecting which fields you want and which fields you don't want. All you have to do is just hover over this link and just change it. You can see the transaction types. Also, you can see what other people have also done with their portfolio and what they've invested in as well, as in the popular or the most frequently added to their portfolio. I'm not really attracted to that. You can look at additional details. You can also look at the transaction details, and you can go back to the portfolio. You can also create, where is this? Hold on a minute. Go back to summary. You can create a watch list or email alert here so that you can be alerted whenever there are information or news about an asset. It's really easy. I can go back again and explain it to you, so you can click on new alerts. Then you can scroll down and highlight the areas that you want to be alerted for. Let me go back again. So it's pretty comprehensive, and it is really good for anyone out there who is relatively new to investing, because it helps build that foundation that you need. I started using this back in 2017. I used it for about a year before I jumped into using my own money to purchase assets. I recommend this to anyone out there. Don't be enticed by using a trading platform that will tell you to kind of buy X amount of shares to just try it out. Eventually they will tempt you to purchase an asset, and it is in your interest to do so. What you want to do is remain agnostic. Use a platform that isn't trying to sell you anything, and it is trying to teach you how to invest. So that's pretty much it. This is a virtual portfolio that you can see right there. Great, brilliant. It's helped me throughout my time investing since 2017, and sometimes I even use it when I want to adopt a particular type or style of investing. That's it, everyone. Have a wonderful weekend. As you can see, the market has closed. And you normally get data every 15 minutes as well. The market has closed, so I can't invest, and you will not see this in real time. Once the market opens, then you can see the changes. By the way, do not buy any asset when the market has closed. You will eventually learn when you start using these portfolio platforms anyway. Because what happens is that a lot of people have probably made a lot of purchases. So the price may reduce or increase depending on how much purchasing has taken place when the market closed as well. So I wouldn't recommend anyone to purchase things when the market has closed. It's suicidal. That's it for now. Thank you. Have a wonderful weekend.